Welcome to Yesterday, Today, Tomorrow. My name is Mariana Cordier, and I am your host. The rapid growth of the cryptocurrency presents possible investors with many questions. If you are considering investing in digital assets, you may be wondering if it's legal, if it's right for you, tax consequences, or even whether it might be a scam. I have two incredible guests here to clear all these issues up for us. I have Dr. Rod Brennan. He's a professor at Rutgers University and an expert on Bitcoin, blockchain, accounting, and internal audit practices. I also have Professor Joseph Bailey. He is a professor with the Smith School of Business, University of Maryland, and researches the topics of economics of electronic commerce and cryptocurrency. That is a mouthful, gentlemen. What does it mean? What is cryptocurrency, Joe?
Well, cryptocurrency is maybe one of the most understood or misunderstood technologies, which is shaping some of our global financial markets. So generally, it's kind of really an asset much more than a currency. I think the naming is a little bit wrong, but it was built on the idea that it's kind of this unique digital thing that has some value and can be used for transactions. It can be used to hold and appreciate in value. But it's really just, from a technology standpoint, nothing more than a unique string of digits that everybody has agreed has some value and some attribution to ownership. And then if we do it right, it can be a platform for things like currency, value creation, and transactions.
Wow. So what does that mean for the common man?
I would say for most people, it doesn't mean too much. I think people have been on the outside looking at this and kind of scratching their heads and trying to figure out what it means. But there are some people who really do understand what it means from a market and a trade perspective. So I think the first thing that the general person should know is it's something that you don't want to just speculate in without really paying attention to what goes on. Unlike, let's say, a share of a company which has some intrinsic value because you're owning a portion of a business, it's not clear that there is some intrinsic value associated with a cryptocurrency such as Bitcoin, Ethereum, or Dogecoin. But what there is certainly a lot of speculation, a lot of interest in it. And we're still kind of catching up with respect to things like the tax implications and the regulation and kind of institutional support of things like cryptocurrency. One of the reasons why I think kind of, some international markets like it is because it really is not tied to any one traditional kind of currency of a country. So if you're interested in trying to avoid, let's say, government regulation and you're trying to trade across different jurisdictions, cryptocurrency might be kind of your place to go. And that's one reason why it has this kind of stereotype as being a currency that can be used to support arguably, illegal trades coming out of places like North Korea or Iran, as well as maybe some black market transactions. So, it has some potential to shape and transform markets, and not all of it is positive.
Okay, so Dr. Brennan, what do you say?
Okay, well, I'm kind of bullish on the concept because it really isn't a new concept. It's basically a distributed ledger using technology like cryptology and other technology to secure it. And as an auditing professional, I'm very impressed with how secure it is. Now I'm talking just about the blockchain and itself, and not necessarily the ramps on exchanges and things like that. But I think also it's inevitable and it's going to be disruptive for the reason that it's ultimately cheaper, better, faster, and way more secure than what we do today. And I can go into all that from an auditing perspective, but just suffice it to say that, it really, as Professor Bailey shared, it's nothing more really than a distributed ledger secured by cryptology is all it really is. Now, and I think the other thing is that we're just at the vanguard, the very beginning of this, because we're using the word cryptocurrency, which really is a misnomer because it's not a currency. It's classed primarily, usually as a indefinite-lived intangible in the accounting right now, and that's a bad classification too. But what's coming now is the tokenization of many things in addition to things that are used or resemble currencies. And by the way, there's 5,000 to 7,000 of these now, all of which have very different uses. You know, some do act like currencies, some act like financial instruments, some act like commodities, some act like inventory. So to say that they're all one thing is very hard as well, because it depends on their use case, and that's how they should be regulated and accounted for. But I think the biggest thing is yet to come, and that's when we start to digitize illiquid assets such as real estate. Already NFTs, non-fungible tokens, artwork and stuff are being and to the point about it being used by criminals, that has been a problem. But I'll tell you, this part of it is that using a blockchain technology to do nefarious actions is actually not a real good idea, because what you do is forever memorialized on a distributed ledger that's distributed to many people.
Let me stop you for a second and ask you, for those of us who don't understand or don't know, what is blockchain?
Okay, blockchain is simply what the first cryptocurrency, the first blockchain was Bitcoin, and it is simply a distributed ledger. So as opposed to having a centralized ledger that's updated by many people, and has a central governance, a distributed ledger is a ledger that goes out to everyone. So for example, Bitcoin, every transaction on Bitcoin goes out about every 10 minutes to millions of people, and it's secured by millions of miners. And the point that I always make from the security standpoint is, if you and I work for a bank and we're DBAs, the entire bank security system today is secured by an auditing principle called 4 Eyes. And that means that I can give you access to super user access to make transactions or do something, but I can't use it. I can approve it. You can use it, but you can't approve it. And I'm also a certified fraud examiner. And in 2020 report to the nations, 51% of some almost 3,000 fraud cases were collusive, meaning there was more than one person perpetrating the fraud. And if you have collusive fraud, you can override any 4 Eyes principle anywhere, in any financial institution, any bank, anywhere. However, with something like Bitcoin or with a blockchain, you need 10 eyes, 100 eyes, if you have 1,000 eyes or more, looking at every transaction and securing it before it goes on the blockchain. Now, I know there are things that are done with ransomware and other things, but most of them are done by abusing smart contracts, and which we can talk about later, and the ramps on and off of the blockchain. So from that point, it's very secure. But it's simply a ledger. That's a blockchain is simply a ledger that's distributed to everybody that's participating in it, whether it's a private or public blockchain.
Professor Bailey, you wanted to add to that?
Well, I wanted to pick up on it because I think Dr. Brennan is absolutely right in terms of making sure that your audience understands the difference between the blockchain, which enables cryptocurrency, as a distributed ledger, versus the cryptocurrencies, which is one kind of use case or instantiation of the use of the blockchain. The one thing that I think the audience should also know is, because it is distributed, it's distributed across geographic boundaries.
Yes.
And so you would have a ledger system whereby, let's say, one of the certificate authorities over in China, as well as the United States, and maybe in Brazil and Germany, all of them would have kind of a receipt of the transaction that took place. And so while it gives tremendous transparency and accountability to say, oh yes, we all agree that this, let's say, non-fungible token has actually changed ownership, between these two people, it's kind of shared throughout all of those different geographies. And one of the concerns has been is kind of, what does that mean from a governance standpoint,
Right.
kind of big G government standpoint. Now, if you have nothing to hide and you're willing to share that information, it provides incredible transparency. And so companies like Unilever have said, we want to adopt blockchain. We want to show that our supply chain and procurement practices are done in a way consistent with our ethics and our values. So they want it to be open and transparent and frankly, very timely. One can imagine, if you're trading stocks, you could get access to transactions that are happening day of in a blockchain before waiting, let's say, a few months for an auditor to come in and actually certify that things are happening. So one could imagine this really speeding up the liquidity of markets.
Yeah. And I think a good analogy would be, think of iOS or Windows as the blockchain. And then any of these cryptocurrencies, be it Bitcoin, Filecoin, whatever, they're just apps that run on the blockchain. That's the idea. The blockchain is really the innovation here. The cryptocurrencies, the NFTs, or tokenization in the future are just apps that are running on this technology.
And so my question to you is, you've got, I'm sure both of you, students in the classroom, and they're all thinking, I need to pay my student loans. How about if I invest a little bit in this currency? How do you identify to test the waters, one, and how would you go about doing that? What would be your advice? And I'll let you both take a stab at it, starting with Professor Bailey.
Well, I would say the students are very excited about investing. They don't seem to mind the volatility that happens with some of these cryptocurrencies. And because many of them have opened up Robinhood accounts, as they're at least dabbling a little bit, even if it's a relatively small portfolio. And it doesn't take too much Python coding to go ahead and set up basically an algorithmic trader where you can take a look at the volatility of a particular cryptocurrency and make a spot market trade, hold that position for a short period of time and get out of it. I'm not sure the students always understand the tax implications for that in terms of holding an asset for a short period of time with any appreciation. But, I would say, I kind of ask them to start with stocks before they start going to something as volatile as, Bitcoin, because they have to have some idea about how to evaluate them, look at the future, kind of set up a shadow portfolio. They're usually not taking their kind of tuition dollars and, doing double or nothing on a Dogecoin. But what they are doing is they're at least kind of experimenting, and they believe that kind of it's their generation's next thing. So there's a lot of excitement and enthusiasm, and that shapes markets. I mean, we saw just a few months ago with kind of GameStop kind of stock kind of escalating a lot because you get this kind of crowd or herding behavior that happens. And I think a lot of them are excited about it.
And I agree. The one thing I do is I encourage, because most cryptocurrencies such as Bitcoin and Ethereum are demonetized to 8 or 16 positions. I tell my students, take $50, take $100. No, don't take your mortgage your home and your your life on it, and invest in some of them, not to make money, but to learn about it. Because that's what I actually did. I got asked by a fintech company that does accounting and auditing technology, it's called Luca, for blockchain, to help them do auditing and on blockchain. And I didn't know anything about blockchain 4 years ago, and they said, "Don't worry about that. We'll teach you that." So one of the things I did to learn it was I bought just a small amount of these coins, and I started working on them and trading with them. And yes, Professor Bill is absolutely right. The Schedule 1 of the 1040, the first question it asks you is if you did any transactions, because every transaction you do per the IRS listing it as a property becomes you have a capital gain or loss. So there are tax implications. But students or anyone, even my wife, I encourage them to buy a little bit of it and just learn the technology, because again, it's the underlying technology. Well, I've lost money on some, I've made huge amounts of money on others, but it doesn't matter. I've learned the technology through doing that. $100, $50, whatever you're comfortable with.
What is the one thing or two things or tips that you need to look for to avoid the scammers? Like, I think that some of the concern and hesitancies, because they're unfamiliar with it, there may be, how do I know if it's a legit whatever, as opposed to a scam?
I would say the first thing is, if somebody's sending you an email, asking for credit card information, definitely avoid that. I mean, we do have brokers who participate in the space and can help kind of be a trusted agent for you to go ahead and hold on to your investment. So Coinbase is a very popular one. I mentioned Robinhood, but there are also kind of index funds that kind of track some of the Bitcoin. And so you can even go to a Schwab, for example, and have some position in cryptocurrency, at kind of a kind of aggregate level. Yeah,
I agree with that. I usually encourage people to use Coinbase or Poloniex or Kraken, or one of the top ones. It's interesting. A study by MicroStrategies to the SEC showed that 85% of the several hundred exchanges a few years ago had some type of wash trading going on, hyping up the value. So I think if you use these good exchanges in good jurisdictions that have KYC, know your customer, and anti-money laundering, AML, I think, and I use Coinbase. Some people use others, but there's about 10 of them that you can really trust that are doing SOC reports, for example, and are reporting to the IRS and others. So, yeah.
So Professor Bailey, you made a really good point of not investing your student loan money or your mortgage or anything like that. So for the newer investors or people who are just getting their feet wet, what are some tips that you would give them?
I mean, I think the first thing, like any good investment, you have to figure out what your risk profile is. If you are somebody who is trying to, take on a lot of risk, then maybe cryptocurrency is for you. But if it's, let's say you're approaching retirement age and you're looking to go ahead and diversify your portfolio, you might want to think twice before kind of, betting the house or betting a significant part of your retirement savings. So, you've got to be able to put up with some of that volatility. And then, of course, it's a risk exposure thing as well. I think there's a lot of people want to join kind of when times get good, and they might be a little bit over exuberant about kind of what the future might be. But just, I think a lot of the graphs that show you the Bitcoin prices, for example, it kind of creeps up and then it'll drop very precipitously. And everybody's excited when it goes up, and not everybody is excited when it drops down. So, again, learn through investment. I think Dr. Brennan is absolutely right. Like, start with a little bit, see if this is for you, learn about what the technology can enable, about how to kind of fit it into a bigger portfolio.
And Dr. Brennan, what about how you can spend it? That you talk about the investing, and you had mentioned earlier something about know which exchange you're on or whatever, because some of it you can spend it and some of it you use it differently. Did I understand that correctly?
Yeah. Well, yeah, I mean, the retail, if you go buy, for example, a cup of coffee with 1/1,000,000th of a Bitcoin, and you can do that, you've now created a capital gain or loss for that cup of coffee that you have to report. So I don't know if people really want to do that. I think most people are holding it on their own behalf as just an investment. So, but there are, you could, well, I guess he canceled it, but you could have bought a Tesla car with a Bitcoin if you wanted to a little while ago. Elon, I think, went back on that one. But I think what I'm interested in, I'm doing a little bit of dabbling in now, is the whole lending part of it and staking. Okay, staking or mining. So staking is the replacement kind of for the proof of what's called proof of work. But so what you do, you can earn money on your crypto while you still own it by staking, which is becoming a part of one of the people who help secure the network. And again, I wouldn't risk any more in that than I would in what I buy, but just learning a little bit. Interesting, the interest rates that they're paying on crypto is anywhere from 4 to 12%, and or 18%. And I don't know who's earning that in other investments right now. But again, if it's just with your $50 and you're playing around with it, it's okay. I mean, go ahead and learn it. And my advice is invest in things you research and you like. I recently invested in something called Filecoin, which is distributed storage. It's threatens to disintermediate, for example, cloud storage, because it's a way to use cryptology, hashing, and security to have storage that's totally distributed with no single point of failure and can be reconstituted at any time. It's a new technology. There's a lot of people in it. Whether Filecoin makes it or not, I don't know. But the technology interests me, and so I do research on what they're doing. Read their white papers, read the press about them, and do the same risk analysis that Dr. Bailey was just talking about. Do that homework, and if there's something you like and something you understand because you researched it, then put $10 in it. Whatever.
The other thing I wanted to ask you is, you mentioned owning a bit in artwork or on other things as opposed to having to own 100% of that Picasso or Monet. Is that really something that's coming?
I mean, it's here.
Yeah.
We have these kind of digital hashes that are unique, and everybody, because it's this distributed ledger, everybody agrees there is one true owner of it. So the very first tweet or a New York Times article or an NBA video, all of these things have kind of created these non-fungible tokens. They're unique digital assets that somebody owns. Again, I think there's no intrinsic value, but the idea is that I own it and it appreciates in value, and I'm willing, I'm able to sell it for somebody else for even more money. And that distributed ledger is still the kind of the blockchain that's there is supporting all of these assets.
Yeah, and like I'm not an artsy guy, so I actually don't invest in any of the NFTs. But what really interests me is, think about if you could own $3 of every building in New York City, and you could trade it and you could with complete security because it's indexed on a blockchain. It's hashed and secured by a blockchain, and research shows that illiquid assets that can be traded in active markets increase in value. So I could own $3 worth of the Citicorp building, and I could invest in futures and derivatives on those, and I could sell it. And where today, if you want to own the Citicorp building, you got to have a lot of money and sign a lot of papers and do a lot of closing. So it's just a way to, and another example would be you want to own gold from the Royal Mint, and it has every big bar of gold has a serial number on it. So you have a token on a blockchain that's completely secure. It can't be hacked. And unless someone gets your private key, and you can own that gold without ever moving that gold. I can own part of gold without trying to put it in a safety deposit box or whatever. So I think that's going to be really interesting and that includes artwork and stuff. I stay away from art because I'm not artsy. I don't really understand it. So,
and Dr. Brennan, I'm curious because I agree with you 100% that it's this liquidity that you can put in illiquid markets by creating these kind of digital assets. But
right.
Isn't it also the divisibility of it? The idea that I couldn't, own it if it was worth $1 million, but if I can own a fraction of that $1 million,
right.
now all of a sudden it's an accessible asset.
Right. And one of the neatest things about this whole blockchain technology is that it gives the opportunity to 2 billion or more people in the world that are currently unbanked and can't monetize things they have. And blockchain provides an opportunity at a very granular level to allow them to enter markets without a lot of friction and without, all you need is a smartphone. I think 65% of people in third world countries actually have smartphones. So they could monetize, whether they're selling pigs in Ghana or whatever, they can monetize things. And I think that's an exciting sort of altruistic part of this whole thing.
How's that going to affect the traditional investing? Is it going to impact it? Like the stocks, the bonds?
I think it already has. I think most people who are high net worth individuals, they've at least considered the question, should cryptocurrencies be part of my portfolio? Now, some of them have looked and said it won't be. I know Warren Buffett is particularly kind of vocal on staying away from it. But I think a lot of people are looking at it, especially when you take a look at the interest rates for safe investments or bonds right now. Cryptocurrency can be very exciting to them.
And I think what you're going to see is the public companies and the large institutions have all but been on the sidelines until very recently. And now you mentioned earlier, Tesla and MicroStrategies and Square and others are putting it on their balance sheets now and investing in it. And what we need, and I'm an intimate part of this right now with the AICPA and others, and the FASB, we need some regulation, because it isn't crypto anarchists that are doing this stuff anymore. It's big institutions that have reporting responsibilities. But the opportunity for, already cross-border payments, huge. Remittance rails, huge. It's disintermediating them. Swift is, blockchain can do things way better than Swift can. So a lot of changes, and I think it's coming fast, and it's going to have fallbacks. China's banning it, and I think China's banning it just because they're coming out with their own central bank digital currency, and the U.S. may do the same. So to me, it's it's a little bit like fighting the horseless carriage in the early 1900s. You're going to have it's going to have setbacks, but it's the blockchain I'm talking about is coming. Not Bitcoin, not any particular one, but it's a neat technology.
Yeah. So Dr. Brennan, may I ask you, because I know
Sure.
the separation of Bitcoin and everything from the underlying blockchain is important. Do you see the market shaping out where Bitcoin or Ethereum or Doge or whatever you mentioned, a file coin as well? Do you see that kind of all coalescing to be one currency, or do you see this being a very fragmented market?
No, I think it's going to continue to be a fragmented market, and I think we may not have even seen the winners yet. When China fully releases its central bank digital currency, U.S. Treasury's talking about doing that. We'll see how those impact the others. I'm actually not that bullish on Bitcoin because it does have this energy issue. The proof of work, which is a consensus mechanism that secures the network, uses huge amounts of electricity. And you can argue away that they're using renewable electricity, but that's a tough one in this world today because we're very sustainability. But there's other alternatives. Proof of stake doesn't cost any real electricity, and zero knowledge proof, and other consensus. And these are just mechanisms for securing the network. That's all. So they're good. So I don't know. I always say this. Back in the 80s, there were 15 companies that had personal computers, and you knew the personal computer was coming, so you could have bet on HP or Dell or Tandy or Compaq. If you bet on Atari or Compaq, you would have lost all your money. If you bet on one of the others, you would have won. And that was only picking 15. Now there's 7,000 of these things. Pick a winner.
That's amazing. I mean, that's a lot of choice and a lot of research that everyone will have to do to figure out what is the best investment. I've got about 20 seconds left. Any last words, Professor Bailey?
I would just say, buyer beware. If you're willing to go ahead and do this, go it with eyes wide open and be ready to go ahead for a wild ride.
All right, and you have also a quick last word, Dr. Brennan?
Yeah, I just say, just get your toe in the water. Don't risk anything, but learn the technology, because it is disruptive in many areas beyond what we're seeing today.
All right, folks, that is all we have about this show. Hopefully we'll have more to come to kind of expand on what we've learned today. I'm Mariana Cordia, I'm your host, and I appreciate my guests being on and the audience for watching, and we're on YouTube and Facebook. See you next time.